Welcome to Season 2 of the Cryptopulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
Hello and welcome back to the Cryptopulse podcast for another one of our weekly episodes about crypto and all things macroeconomics. Ben, this week we're going to be asking the ever important question, which is, when will the bear market end?
Oh, soon, I hope.
Very soon. and that is the end of the episode.
Absolutely. I hope that's answered your question.
Thank you.
No. In all seriousness, this is the question I get asked probably the most at the moment. I think when we're in the middle of the bull runs, the question I get asked is, what should I buy? What's going to make me rich? And when we're in the bear market, it's always, when is this going to end? And it's a difficult one to answer, but I hope that today we can potentially polish off our crystal balls and come up with some ideas.
Yeah, exactly. We've got some historical information about previous cycles, and we'll put our own perspective on this, of course, not financial advice, and it is just our own perspective. But our wonderful producer, Cal's done some research for us to help us try and answer this question. So the current crypto price drop has been going on for more than 9 months now. So everyone has felt the chill of the crypto winter, which has only been worsened by the current economic turmoil that is playing out worldwide, and of course the collapse of Terra, Celsius, and Three Arrows, adding a lot of fuel to the fire. But with the last FED CPI announcement, and we do, just for clarification, it's the 25th of August, we have another announcement coming out on tomorrow. Isn't it? On the 26th.
Out of Jackson's Hole.
We saw a little bit of a boost out of Jackson. So I guess that's a place, right? Not it Michael Jackson's.
No,
anyway.
not as.
I was going to say, is that where the announcements come from now?
Well, I mean, it's definitely going to be shit. Put it that way. So I think the first important thing to do is to just determine what a bear market is. And this probably seems like a really obvious point, but lots of people might not necessarily understand. We get bull markets and bear markets. So to identify what a bear market means in terms of crypto, if we use the stock market's definition of a bear market, which is a fall of around 20% off the recent highs, then we would normally be experiencing a bear market on the weekly within crypto. But obviously crypto is much more volatile, and so we have to kind of approach it in a different way. Typically within the crypto space, a bear market usually means an 80% drawdown across the entire market, and it typically happens after either a blow off top, where we have these sort of mega price spikes that sort of that end in a cataclysmic drop. And that's really kind of what we're seeing at the moment. So we had a rally towards the end of 2021, and now we're having a slow bleed seemingly down to zero.
Oh, I don't think it'll go that far.
No.
Well, if it does, I'll be buying a lot more, I can tell you that much.
Yeah. How much Bitcoin could you buy at £0?
Oh, all the Bitcoins in the world, I'd imagine.
All of them.
Well, yeah. No, not all of them. I mean, some people just wouldn't sell them for zero, would they? And anyway, it's not going to zero. Don't worry, boys and girls.
No, it definitely isn't. But another thing to consider is just when this bear market officially started. So if you're of firm belief that the bear market started in November, then we would roughly be looking at another 6 to 12 months before we start to see rising prices. But if you're instead of the belief that the bear market truly started when the Terra Luna crashed, then we'd probably be looking at another 18 months or so before we start to see the light at the end of the tunnel. So this would really correlate with the next BTC halvening as well, which would potentially be against a nicer macro backdrop. So into sort of 2024, as we come out of the end of this recession, it's a difficult one to know exactly when this started. My gut really says that actually the bear market starts after that major price rally that we saw in November last year. So I would say that we've really been in a bear market now ever since. And I also think, we talk about this a lot. There's the human psychology tends to be a lagging indicator, and we typically tell ourselves, this is just a dip in the bull market. It's just a dip, and then before you know it, you're 9 months into a bear market. So
yeah. I know denial's a strange thing, right? I mean, we've lived a couple of cycles now, and it just reminds me a little bit of what happened at the end of 2017, start of 2018, although we didn't see a blow off top this time. So there is a theory that we also don't see a blow off bottom, if that's a thing. So, it is more of a gradual ascendance up, and maybe it'll be a little bit more of a, I'm going to steal a line here from the Fed, but a softer landing.
A softer landing, that would be nice. But of course, the only thing that we can do really on the show is to speculate. And one of the best ways of doing that is to look at some of the historical Bitcoin price action. And as we said, we've been lucky enough to be given some great research notes, because this information is not all in my head. But we're going to go right back to Bitcoin's genesis and talk about the first Bitcoin price crash in 2011, where Bitcoin went from $32 all the way down to a single cent.
Wow. Okay. I tell you what, if you bought at that 1 cent, in fact, fuck it, if you bought at $32, wow, that's incredible.
Yeah, that's pretty good going, isn't it? You'd certainly be doing well today. Assuming that you didn't sell during any of the subsequent rallies.
Yeah, exactly. So the sharp sell-off was largely attributed to the security issues at the now defunct Mt. Gox Japanese crypto exchange that traded the majority of Bitcoin at the time. The exchange saw 850,000 BTC stolen due to a security breach on its platform, raising major concerns with the security of Bitcoin stored on exchanges. We've spoken about Mt. Gox a few times back in the last season, actually. So with BTC losing about 99% of its value in a few days, Bitcoin's June 2011 price crash became a big part of Bitcoin history. The event opened up a long period before the BTC price recovered to the previous high of $30 and climbed to new highs only in February 2013. It's difficult to track the pre-2013 Bitcoin price accurately when compared to more recent charts, and popular price tracking service sites like CoinGecko and CoinMarketCap do not track Bitcoin prices before 2013 because there wasn't particularly a lot of interest from retail investor types back then.
Yeah, you're right. And there also wasn't a lot of infrastructure built around Bitcoin. And so tracking the price was a very manual process. I remember there were people back in the days of online forums that were building spreadsheets that you would have to download and sort of you'd have to update every so often just to get the latest Bitcoin price tracking, which was interesting, quite a novel way of doing it. Luckily, we have moved on to more sophisticated ways of doing that. But yeah, it's interesting. I actually didn't know that it went down as low as a single cent. But I suppose if 850,000 BTC was stolen from Mt. Gox, then that would have been a large portion of the total supply at the time.
Hey, I guess if you had like 1,000 BTC and it went like from 32,000 to $10 and you're like, wow, just get like $10,000 out, you're probably thinking, well, I bought these for like a few dollars each, that's a good deal, and just thought you were a bit of a genius before the market dipped, which, if you'd have gone back in right at the bottom, you would have been. But yeah, it doesn't surprise me. I think it's human psychology. When you see these capitulation events and cascading prices, then naturally you get people just panic selling, and that drives more panic selling until a bottom arrives in the market. I mean, that really was a bottom.
It really was, yeah. I mean, I can't imagine how it would have dipped much lower than that. But the great thing is, as with most of these Bitcoin bear markets and these massive drawdowns, is that Bitcoin is quite secular, or at least it has been since its genesis. And Bitcoin did rise from the ashes and returned to fame in 2015 as it rallied the second time from a cent up to $1,000, which is that's just completely mind-boggling. I mean, that must represent, is it about 1,000,000% increase?
Unbelievable, yeah.
Bitcoin price reached $100 in mid-April of 2013 and then continued surging to briefly hit $1,000 in November 2013. Bitcoin entered a massive bear market shortly after breaking $1,000 for the first time in history, with the Bitcoin price tumbling below $700 1 month later. The price drop came as a Chinese central bank began to crack down on Bitcoin in late 2013, prohibiting local financial institutions from handling Bitcoin transactions.
That old chestnut again.
That old chestnut, yeah. China's banned Bitcoin. I think they've used that now 15 times in total.
Oh, not again.
Yeah, but the cryptocurrency continued plummeting over the next 2 years and bottomed out around $360 in April of 2014, then dropped even further to hit a brand new low of $170 in January of 2015. So this really was the first 80 to 83% drawdown. And you'll often hear this repeated by some of the Bitcoin maxis, that typically after these blow-off tops, we get something like an 80% drawdown across the market.
So the long cryptocurrency winter of 2014 became associated with the hacked Mt. Gox crypto exchange, which halted all Bitcoin withdrawals in early February 2014. The platform then suspended all trading and eventually filed for bankruptcy in Tokyo and in the United States. Some financial authorities also raised concerns about Bitcoin, with the US Commodity Futures Trading Commission, them again, claiming that it had power over Bitcoin price manipulation in 2014. The general sentiment around Bitcoin was mainly negative until August 2015, when a trend started a long-term reversal. Amid the strong bullish market, Bitcoin eventually returned to the $1,000 price mark in January 2017. This was the longest all-time high price recovery period in the history of Bitcoin.
Yes, interesting that the US Commodity Futures Trading Commission were talking about regulating Bitcoin back then.
You'd have thought they'd have got around to it by now, right? Like a decade later, and we're not really any further forward, are we?
It's not like they haven't had time, is it? Actually, what's more staggering is that the Mt. Gox legal case has only just recently been settled, and people that lost Bitcoin in that heist are actually only now starting to get their payouts. So interesting that that's happened before the Commodities Futures Trading Commission have been able to bring in any meaningful regulation, but they move at their own pace. What can we say?
They sure do.
Yeah. But as we said, every single drawdown in Bitcoin's history so far has been followed by a mega rally. Now, this is probably the most prominent one that people typically remember. I think Bitcoin had just started to hit that point of sort of mass adoption, or if not mass adoption, mass awareness. People knew about what Bitcoin was. They understood what cryptocurrency was. They might have heard about it as being a scam. But Bitcoin moved from the lows of that cycle from $170 up to $20,000 in December of 2017. And it actually took 36 months for it to retest its previous all-time high. So after a recovery to $1,000, which happened in January 2017, Bitcoin continued to rally as high as $20,000 by the end of that year. However, similar to Bitcoin's previous historical peak of $1,000, the triumph of $20,000 was incredibly short-lived, and I actually remember this.
I remember it like it was yesterday.
Yeah, because Bitcoin subsequently dropped and lost more than 60% of its value in a couple of months. So the year 2018 very quickly became referred to as a crypto winter because the Bitcoin market continued shrinking, with BTC bottoming at around $3,200 in December of 2018. Staggeringly, only 4 years ago. I mean, you look at the price of Bitcoin today, and at the point of recording, we're at about $21,500. The fact that in 4 years, whilst we've obviously had enormous amounts of volatility, show me any other asset class on earth where, you could have purchased one for $3,200 and today be sat on a 500% return. I mean, it's
there's nothing else
really
like it, really, is there? Unless you've got lucky with some other, stocks or something like that. So it's quite incredible, really. But I remember that drawdown well, and of course altcoins suffered a lot more than what Bitcoin did. I mean, some altcoins lost 95% plus of their value, which there's a huge lesson in that.
Yeah, I think that was the cycle of the ICO, wasn't it? The initial coin offering. And it seems to me that every one of these cycles tends to have one key narrative around it. I think the one that we've just gone through is sort of DeFi and NFTs. The one previously was ICOs. Before that, it was around crypto exchanges. And I'm curious to see what comes next. But just to finish our point on this cycle, so the crypto winter kicked off with security issues on CoinCheck, which was another Japanese cryptocurrency exchange. And in January 2018, CoinCheck suffered a gigantic hack, resulting in a loss of about 530 million US dollars of the NEM cryptocurrency. The bear market further escalated as tech giants like Facebook and Google banned ads for the initial coin offerings and token sale ads on their platforms in March and June of 2018, respectively. So the global crypto regulation efforts also contributed to the bear markets as well. The US Securities and Exchange Commission rejected applications for BTC exchange traded funds. That is a theme which has been running throughout this. I mean,
my God, it's like reading the year just gone all over again in some regard. I mean, what's the saying that history doesn't repeat itself, but it rhymes? Well, my God, that's really rhyming there.
Yeah, I mean, how many times have you heard that a BTC exchange traded fund, a spot exchange traded fund, has been rejected by the SEC? I mean, I can count on probably both hands the amount of times that I remember, but there have been some big players that have gone in with some really serious applications, and we still seem to be no closer to that.
Yeah, I think this is going to be driven from the bottom up. So I think it's going to be driven by wealthy retail investors insisting that they have access to this market. And we a couple of hours ago we were chatting to Greg Foss, so you'll hear that interview next week if you're listening to the show on Saturday, which you will be if you listen to it when it's come out. And he was saying, about the pressures from BlackRock clients that wanted exposure to BTC, and I think a similar thing will happen. So I think it'll be driven by market demand, and eventually they'll have to get some approval because so many institutions and so many banks will be insisting this happens, and at that point I think they'll have no choice but to accept one and provide some better framework. But anyway,
You're right. I think the thing that I try to drive home to people is that they shouldn't wait for that day to come, because there are so many ways to access the Bitcoin market now. There are tools that are available for you to take self-custody of your crypto assets, for you to store your private keys. Don't wait for the day where these things are available through deposit accounts with the bank, because by which time, that's when the I think they call it the late masses join the party. So get ahead of the game, definitely. And actually, just to pick up on the episode with Greg, I mean, it's well worth tuning into because he talks a little bit about risk management and portfolio allocation. So if you're wondering how much Bitcoin to buy, he answers the question in perfect detail. But to come back to the point of the show today, and to answer the question that we get asked is, when is this bear market going to end? I mean, I guess the
we
answer
don't
is
know.
we're still not really. We don't know. We're still not 100% sure. But I think we can say with certainty that it will come to an end. I
Absolutely.
think Bitcoin is secular. It's secular in nature. We're still in our infancy. Bitcoin's market cap is only about $500 billion. When you pick that against gold, which is a $10 trillion market cap, I mean, the benefits of Bitcoin versus gold are far greater. It's portable. You can take self-custody. It can't be taken. It's non-corruptible. It's a digital asset. To assume that Bitcoin could at least be the size of gold in terms of market cap would put Bitcoin at around $500,000 in value. So, as our friend Greg said earlier, the risk reward on that is huge. And it only takes a little bit of patience. I think that's the key thing, is just waiting and figure out a way to enter the market sensibly. We talk about dollar cost averaging quite often, and that gives you a really good average price over a particular time frame. So, yeah, do we know when this is going to end? Don't know.
I would imagine we're going to be looking at. So this is my personal opinion. I don't know if you share this. I think we're going to see some kind of plateau. We could see further falling. So we may not have seen the bottom yet. A lot of it's going to depend on the macro environment. But realistically, I think we're going to see, my expectation is 2024, and maybe we see it before then. Maybe we see an uptrend before then. But I think 24 will be a big year for Bitcoin and a big year for crypto. And that also coincides with the next Bitcoin halvening as well. And I think by that time, the stock markets, etc., will have had time to recover. And of course, we have observed that Bitcoin is tracking things like tech stocks and stuff like that. So, we'd be silly to say that it's going to definitely decouple. It will at some point. We're convinced of it, but that soon, not so sure. I don't know. What do you think?
Yeah, good question. Well, I think you're right. Bitcoin at the moment is behaving like a risk asset, and typically, it's being traded. People are using it as for short-term speculation. I don't think that the mass market or the majority of people worldwide still fully understand the properties of Bitcoin that can hedge against hyperinflation and hyperinflation. And I think that as people start to twig and they start to realize that this is the only properly scarce digital asset that's secured by a global network of computers through proof of work. I think when they realize that, and when they realize that this is really the only money that they should be using, I think it will decouple eventually, but it will take some time. And I think it will be interesting to observe, but at which point, when we sort of hit that point of hyperinflation, I think it will be like rats leaving a sinking ship.
Yeah. Well, when you were saying that, I was thinking flies on dog shit, but that's not what I mean at all. It's completely different.
Flies on dog shit.
Yeah.
If Bitcoin was the dog shit, but
yeah, it's absolutely not. Yeah, I was going to ruin a surprise from the Greg Cross interview then and talk about another analogy, but I won't, because it's hilarious and you want to actually hear that from him. So okay, and in the meantime, what are we doing? Well, again, this is not investment advice. We're sharing what we're doing, and we're sharing what other people are doing in this space, and that's the dollar cost average into Bitcoin and to other cryptos we like. Small amounts, fairly often through the bear market. And some of the best people in this space we've spoken to have said that the greatest portfolios are built in a bear market, not in a bull market. And we've seen that personally. We've seen how that is true. So you want to buy stuff that's going to be around for a long while.
Yeah, absolutely. You have to do the opposite of what you think is right. And at the time where all of the hype is sucked out of the crypto market, or any market, in fact, that's the time to be looking for good, meaningful positions and building them slowly, because that's the time where people are not excited. People aren't interested. They're offloading their portfolio. They're typically selling at a loss. Retail investors leave. And what you want is to be in a great position for when that retail investor hype comes back into the market. As we say, luckily the crypto scene is pretty secular, so you can say with some degree of certainty that there will be a rally at some point. But you just want to be well positioned for that.
My personal bottom signal in the social environment is that if nobody in my social circle, like at my gym or where, like in my football team or wherever I go, asks me anything crypto related, and if nobody talks to me about it for a few months, I know that there's such disinterest in the retail market. It's probably a good time to feather your nest.
Yeah, that's a very good point. And the opposite of that is also true. When your hairdresser starts asking you about which meme tokens they should be buying, that's probably a good indicator to sell.
Which one's going to move? Yeah.
Neither.
Yeah. Newsflash. All right. Yeah. Well, I hope that's been useful. So we always like to look at previous data, and we like to observe other macroeconomic trends. So this information is valid for the 25th of August 2020. So we recorded this a couple of days before the show goes out. We've, of course, got the Fed announcement tomorrow, Friday the 26th, from Jackson's Hole. We'll see what comes out of Jackson's Hole. I mean, let's hope it's a bit of good news.
Fingers crossed.
But yeah, thanks for listening, and we'll catch you soon. Cheers.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Cryptopulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Cryptopulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.